Hello and welcome. You're watching Business Today TV. I'm Sakshi Patra, and on this special edition, our focus is on the Q4 earnings, and the company on our radar is Canara Bank that reported its Q4 earnings yesterday. We did see the net profit doubling to 3175 crore rupees in the quarter. We also saw that the asset quality for the bank has improved, although the street had estimated, some bit more improvement as far as the NIMs is concerned, and the NII growth is also concerned, and therefore you can see a slight subdued reaction on the street of Canara Bank 306 currently. Now, joining in to discuss the future prospects and the business insights is the top management of the bank. With me is Mr. Brij Mohan Sharma, the Executive Director of Canara Bank. Welcome, sir, and thank you so much for taking the time out for this discussion. Let me kickstart by asking you the key drivers of the performance that you've seen this quarter, and could you have done better? And if not, then what were the limitations this time?
Good noon, madam, and thank you for providing me an opportunity. First, through your channel, gratitude to all the stakeholders for their consistent support and enhanced trust in us that has enabled the bank to deliver a historical 5-digit net profit of 10,624 crore and operating profit of 27,750 crore in the financial year 2022-23. With this encouraging profit, bank is well capitalized today with CRAR 16.68%, one of the best among public sector banks. Another silver lining of our financial result is consistently ensuring quality of assets, and our gross NPA has come down to 5.35% and net NPA to 1.73%, and bank is quarter to quarter ensuring sustainable business growth. And as on March 31, 2023, we have delivered total business of 20.41 lakh crore, YOY growth 11.72%. And we have taken care of all the stakeholders. To the shareholders, our board has recommended a dividend of 120% of the paid up capital, while we 65% last year. To the employees, we have paid maximum 15 days PLI for the third year in succession. They are happy and their morale is high. And to the customer, last year, we have offered increment interest rate of 1.90% on all the term deposit holders.
Right. You did talk about an important aspect, and that is asset quality, which has seen an improvement on a quarter-on-quarter basis as well. But I wanted to understand, as far as the provisioning number is concerned, that still is increasing both on a year-on-year and on a quarter-on-quarter basis. If you could list out for all our viewers, what is that on account of? And in FY24, do you see higher provisioning continuing?
Yes, madam. At present, our PCR is 87%. And it is our endeavor to provide more provision quarter to quarter. And our guidance for the financial year 24 is 90%. And we will ensure it.
Okay. What about slippages, sir? That also look high in this quarter. And what is your overall number of what you would expect slippages to be in FY24?
We are keeping a vigil eye on the slippages, and our slippages are well under control. Quarter to quarter, our slippage ratio is 0.34, and we are maintaining it, and we will ensure to maintain the same.
Right.
Slippages are well under control.
Sure. On the net interest margins, of course, they have improved to 3.05%. What is the overall guidance that you are looking at on the NIM front for the new financial year?
NIM front, we have given the guidance about 3%, and in the financial year 22-23 also, we have ensured 3%. Now we are giving guidance of 3.05% for the financial year 24.
Got it. If you could help us understand, your advances grew about 16%. What is the growth outlook from here? We have seen that the corporate loan book has really performed this time. Will that continue to be your focus area going forward?
Though we have given a guidance of 10.50%, but this guidance is based on minimum expected business. But our business, our credit business will grow faster than this. Corporate credit and gold loan, they are our strong pillars in credit disbursement, but we are going to strengthen our RAM credit this year, retail, asset, agriculture and MSME.
Okay. Since you did mention the gold loan portfolio, there you expect continuous performance. If you could help us understand what is the current yield that you are enjoying here?
We are enjoying a yield in the vicinity of 7.50%.
And will that continue?
On gold, it will continue.
Okay, got that as well. Your international loan book seems a little weaker. What is that on account of, and are we likely to see an improvement going forward?
Yeah, we are very prudent, not aggressive on international book. Okay, now we are planning to open a branch in Gift City, Ahmedabad. After it settles down, we will be aggressive on international business.
Okay. And which are the sectors in the corporate areas that you're witnessing maximum growth for loans and demand for loans as well?
Our main area in corporate credit is ham credit, where there is a de-risking of balance sheet, less risk, and risk is only up to the execution level. So our main thrust is on ham project, then ethanol, then there are certain A-rated, triple A-rated NBFC also, where we are giving more emphasis. So
Okay.
ham, ethanol, and NBFC in corporate
Okay.
credit.
Okay. Overall, you did say that, you are expecting a double-digit growth on the loans, right? 10% odd is what you're expecting. Would you continue to see a bigger pie of corporate going forward from here versus retail?
Our credit portfolio is well diversified, 55% RAM credit, 45% corporate credit. We will continue to maintain the same plus minus 2%.
Got that. Also, lastly, any plans to raise equity going forward from here?
We are, as I have told you, our CRA is 16.68%, one of the best in the public sector banks. So we do not see any rationale for raising the equity, particularly in the current financial year. Though we have decided to approach the board for raising 81 and 82 in the financial year to the tune of 7,000 to 8,000.
Understood that. Well, thank you so much, Mr. Sharma, for being with us and discussing the insights about the quarterly earnings. All the very best to you for the coming quarters, and we shall continue to touch base with Canara Bank to understand more about the business outlook going forward. Many thanks.
Thank you very much. Thank you.
All right, Canara Bank still subdued in trade after the earnings, although if you see the number looks whopping that there's a 90% jump on the profitability front, but there was a larger expectation on the street and therefore you do see that subdued reaction. But an important takeaway from the interaction is while the business outlook continues to be positive and the company will be aggressive on the corporate loan book going forward as well. But the biggest takeaway that I found was that the company is looking at opening, a branch in the Gift City, and after that the international focus is likely to be more aggressive from the bank side as well. So that is something that we shall continue to watch out for. Until then, many thanks for tuning in, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets coming up on your screens. Many thanks.
The Indian OTT landscape is fast changing, and Amazon Prime Video has emerged as a front runner in this whole scenario. I'm joined by Mr. Sushant Sriram of Prime Video. Thank you so much for joining. It was a lovely address. It was lovely hearing about what's coming up next. So, do you want to get into what's coming up next and give us a sneak peek?
We didn't do a sneak peek inside, by the way, of what's coming up next. We have a lot, short answer, coming up next. In fact, just yesterday, we announced our next Amazon original, The Hard, which is with Excel and Tiger Baby Productions, with Sonakshi Sinha, and phenomenal cast, in the lead. We have a lot happening. And as you saw inside, last year we've had